I know that there are hundreds of technical indicators available out there, but to be very honest, out of all these technical indicators, very few of them actually work. Very few of them will actually make you profitable traders. So in today's video, let's learn about 3 such technical indicators: moving averages, MACD, and central pivot range, or CPR. So hi all, welcome to the 30th episode of the complete learning series of stock market investing and trading. As always, I put all these videos into a single playlist, and the playlist is available here in the I button. Make sure you watch all the videos in the right order and learn really well. Let's all trade together and grow together. So yeah, we've started learning about technical indicators. I hope you watched the first basic video of what technical indicators are. The link to the video is available here. If that is the case, let's actually start learning about some very useful, some very important, some very working technical indicators. So as I said, the agenda of today's video is super clear. We are going to learn everything that is there about moving averages, MACD, and CPR. That is that. So yeah, without further ado, let's get right into it. The name is Sharik Shamsuddin. Welcome to Market Feed. So hey students, let's learn about 3 wonderful technical indicators today. But again, before getting into the class, let me tell one thing which I have been telling multiple times before, right? Which is, when it comes to learning technical indicators, the world is a bit different. There are people out there who say that technical indicators are bullshit. You never have to learn any technical indicators. You only have to rely on price action and you can become a good trader. I stand by that. And I have told multiple times that I am a trader who use price action mostly, but I look into certain few technical indicators also. So I would say to beginners in your learning journey, when you are beginning out, when you're starting in your learning journey in order to become a good profitable trader, I seriously think that you should at least try out few technical indicators, right? Try out a few technical indicators and eventually you might actually end up using few of the ones you actually tried out. Right? So that is my honest opinion to all of you beginners, learners out there, right? Learn a few technical indicators, try using them. Yeah, try using them, try applying on the charts and try watching them at least. And eventually you might actually feel that, hey, few technical indicators are actually working out for you. It can really happen as it happened with me, right? So that is that. If that is all clear, then mark your attendance down in the comment section. Let's start learning. Right. So yeah, technical indicators masterclass is what's happening here. In today's video, again, just setting the agenda right. 3 technical indicators are what we are going to learn. Number 1, moving averages. Number 2, MACD. And number 3, CPR. 3 amazing technical indicators are what we are going to learn today. So number 1, moving averages. Now this is an technical indicator which is almost always there on my chart. When I was Nifty, Bank Nifty, Fin Nifty movement on an intraday basis, that is on a 3 or a 5 minute candle, I mostly have few moving averages plotted on my chart. They really help. So let's learn about moving averages, right? So the first thing is, what is a moving average? Now in the last video, we learned that technical indicators could be classified based on certain things, right? Just based on that, let's talk about what moving average is. It is a lagging technical indicator, right? We learned about this in the last video. So if you haven't watched the last video, make sure that you watch it. The link to the last video is here. So it is a lagging technical indicator. It also helps us identify the trend and also it tells us about support and resistances. So basically, this is the very basic thing that you need to understand regarding a technical indicator. 1, it is a lagging indicator. Number 2, what does it indicate? It indicates the current trend and also it kind of tells us what the supports and resistances are. Now, isn't this amazing? So if there are some things on the chart, and if that is actually telling you what is the trend and what is the support, what is the resistance available, won't that help you take a trade? And that's exactly how you can use moving average. Now coming down, you can see that even under the technical indicator moving average, there are two different types of moving averages available. Number one is SMA or simple moving average, and number two is EMA or exponential moving average. Very important to understand this, right? So if you come here, you can understand here. SMA or simple moving average is the mathematical average of prices over the past time periods. And EMA is very similar to SMA, but it gives higher weightage to recent price. Now I know this is a bit confusing, but again, if you watched the last video, the last class, we actually took the example of Virat Kohli and his batting average, right? So we looked into his batting average and we saw that it is nearly 50. So when he comes out to play next, we have an expectation that Virat Kohli would score somewhere around 50 runs because his average is 50, correct? Now, moving average here for a stock's price is very similar to that. But there is one change when it comes to the stock market and the moving average here. Because whenever we speak about moving average regarding a stock or an index, there is always a time period attached to it. For example, there will be 5 SMA, which means that the average of the price of that stock or the index over the last 5 candles. And these 5 candles can be of any time period. Say you are looking into 5-minute candles, and if you're looking into 5 SMA, it means that over the last 5-minute candles, what is the average of the price? If the candles were daily candles, then 5 SMA would actually tell the average of the price of the last 5 days. I hope you get the point. But when we speak about the batting average of Virat Kohli, it is from the starting of his career till the day that we are looking into it. Correct? So there is one change, which is the introduction of time period here. So I hope now you understand Virat Kohli's batting average is very similar to the simple moving average or SMA of a stock's price. It's just that there is an additional element of time period when it comes to SMA. Whenever we speak about SMA, there will be time period also attached. There is 5 SMA, 10 SMA, 200 SMA. What is 200 SMA? The average of the stock's price over the last 200 time periods. I hope this is clear. Now let us talk about EMA here, exponential moving average. Now it is very similar to SMA, but it gives higher weightage to recent price. Now again, I'll take a story or an example here so that you can understand better. So say Virat Kohli has batted for 200 matches. Okay, over the 200 matches, his average is 50. But in the last 10 matches, his scores are only 0, 5, 0, 7, 0, 3, 2, 5, like that. All are very small scores. Even then, right from the 0th match to the 200th match, if you see the average, if you take the actual absolute average of all the runs that he scored, then it is 50. But as I said, over the last 10 matches, he has not scored well. So when he comes out to bat the next day, would you actually say that he actually stands a chance to score somewhere around 50 runs or somewhere around 10 runs only? Because over the last 10 matches, he has been performing very bad, which means that his current form is bad. What would you actually say? Would you actually look into his 5-year-long average, or what matters most is the nearby average? Shouldn't more weightage be given to recent performance? That is exactly what a EMA does. See, it is very similar to SMA, but gives higher weightage to recent price. So if I'm just taking the example of Virat Kohli again, maybe he has played 200 matches, but more weightage would be given to the scores which are made recently. Just like that, if you're applying EMA to a stock, more weightage would be given to the price made recently. Very clear. Now again, these are all theory. Let's actually get into the practicals of this. Let's actually go into a chart, plot EMAs. So again, let me tell you this, going ahead, mostly we'll be looking into EMAs only, exponential moving averages only, right? So let's go into a chart and practically learn how to plot them and how to understand them. Now, as you can see, we are here in the Fires terminal. I'm looking into Nifty Banks, Bank Nifty's chart here, and the time interval I'm looking into is 5 minutes. So what are we going to do? We are going to plot moving averages here, right? So as we learned in the last video, you have a basic understanding of how to add indicators onto a chart, right? How do you do that? You come here, click on this FX indicators thing, and you search for what you need. Moving, average, and exponential is what we are looking for, right? Moving average exponential is what I'm going to add here. So if you come here, it has been added, and This is what I've been talking about. This 9 that you see here on the screen is the time period. So if you see here, this line which goes here, right, which is currently at, if you see here, is 43,022. So what does that 43,022 means? Over the last 9 candles, the average price of Bank Nifty given more weightage to recent candles is 43,024. And you can see, right, currently Bank Nifty is at 43,080 and 1, 2, 3, 4, 5, 6, 7, 8, 9 candles before it was at 42,960. So it moved up so much, and over this period of 9 candles, the average is somewhere nearly, how much is what it is saying? 43,024. Very clear? So just like that, if you go here, you can click on the settings button here and you can go to inputs and change the length here. Say you want to give 50. Okay, just taking an example. 50 I'm taking, clicking on OK. Now see, the curve actually got smoothened. And what is the value now? It is 42,996. What does it mean? Over the last 50 time periods, which are 55-minute candles, the average price of Bank Nifty is 42,996. I hope this is very clear. So, in fact, if you come here and you change this into, say, daily candles, right? I've changed it into daily candles. I'm clicking here on auto. So, now if you see, the 50 EMA is at 41,106. What does it mean? The average price of Bank Nifty over the last 50 days. The time period now is day because we've changed the candle time frame to 1 day now. So, over the last 50 days, the average price given more weightage to nearby days is 41,107. I hope you're understanding this. Again, understanding averages are super important because, hey, that is how we can actually make some intelligent guesses as to what could happen to the underlying. Correct? Now, since you have understood practically how to plot moving averages on the chart, then let's get back into our presentation and then let's learn some practical application. Let's first learn about how to apply moving averages for intraday trading. So when it comes to intraday application, as you can see here, 10, 20, 50, 200 EMA are widely used for intraday trading. So I've seen multiple people loving multiple different time frames when it comes to intraday trading, but all of these time frames that you can see here are widely used, are popularly accepted is what we can understand. So what you can do is on your chart, you can add all these EMAs. I know it can be a bit overwhelming, a lot of lines on your charts, but you can actually add all these EMAs onto your chart. And what is the significance there? That's the second point here, right? The lines, after you plot them, they will start acting as support and resistances. And crossovers of these lines give indication of trend reversals also. I'll actually go into the chart and show you. No worries at all, right? So what is it? You have to plot, if you're interested, you can plot all these EMAs on your chart, and these will be lines on your chart on top of the candlesticks, right? And these lines will act as supports and resistances. Let's see, right? So let's actually go and plot 10, 20, even 5 EMA is also required. So we'll add that also, right? So I'm going into 5-minute candlesticks here because we are going to do it, or we are going to learn intraday application here. So we already have 50 EMA here. So I'll go into indicators again. So I'll just search for exponential because that moving average is the only one which has exponential in the name, right? So I'm adding it like multiple times. So I need 5, 10, 20, 50, and it's already there, and 200. So these many are enough is what I believe. As you can see here, all of them came with the time period of 9. So we have to go into settings and change the time period here. I need 5, and I don't want all of them to look the same, right? So you can always select the color of the line that you would like to see on the chart. So 5 EMA, I'm happy to go with, say, white color, right? So I'm adding it and clicking on OK. So now if you see here, this white line which goes like this is the 5 EMA. Yeah, it's the 5 EMA. So now I'm coming here, I'll change this to, say, 10. I need a 10 EMA also. The color has automatically come here to be yellow. So I'm happy I'll go with yellow. So I have my 10 EMA line running there. Now I'm coming here, I'm changing this into, say, 20. Yeah. 20, and style color I need to change it to, say, green. Green is fine. Okay, so I've added that. And finally, I'll also love to go with the 200 EMA. This is also very interesting, right? So 200 is what I'm going with. And color I'll select. Red hasn't been selected, right? So let's go with red. Okay. So now as you can see, I'll just minimize this. Yeah. So as you can see, there are multiple lines on the chart right now, which can be a bit intimidating, but hey, these can be useful, right? So what is being said is, any of these lines which are moving averages, they can act as a support. If the price is coming up from the top, then it can act as a support. A 10 EMA can act as a support. If that is being broken, then next 20 EMA can act as support. If that is being broken, then 50 EMA can act as support. If that is being broken, then 200 EMA can also act as a support. If the price is going up from bottom, and then if it is touching 10 EMA, it can act as a resistance. If that is being broken, then 20 EMA can act as a resistance. If that is being broken, 50 EMA can act as a resistance. And I hope you get the point, right? So let's see here. Let's see here, the morning, the day opened somewhere around here. Bank Nifty started coming down. It actually started coming down, down and down, and see what happened here. This red line is a 200 EMA. It actually rejected from here, went up and see where it took resistance. The blue line, and the blue line is 50 EMA. See, it took resistance here at the blue line, and it came down, tried consolidating around as 200 EMA, but then couldn't do that. That support was broken, and once the support is broken, we know a huge fall can come, right? A huge fall actually came. Then Bank Nifty is trying to move up. What is the yellow line? Again, just ensuring is a 10 EMA, right? When it started moving up, see, it took resistance at its 10 EMA, then came down, then went up, took resistance at 10 EMA, 20 EMA. See, when the 10 EMA is broken here, went up till 20 EMA, that acted as a resistance, then came down again. Tried moving up again, 20 EMA acting as a resistance, came down again. When moved up again, 20 EMA actually being broken here, went up till 50 EMA, which is the blue line, took resistance there, came down, then went up, took resistance at 50 EMA, broke it, came here till 200 EMA, took resistance, came down, and then broke it eventually. I hope you get the point. So once you have on an intraday basis, it's not necessary to have all these, right? When I personally trade, I don't have 5 EMA. I just plotted it just so that you can learn. I personally use 10, 20, 50 and 200 EMA. I normally have those on my charts, right? They help a lot is what I'd say. So that is that. So now I hope you understand how to plot EMAs on your chart and how to look at them as support and resistance. So the next thing you can see here is, when there is a crossover of two EMAs, that is, when a smaller EMA crosses over a longer or a larger EMA, then that is indication of a trend being formed. That's what is being said here, right? So there is a very famous strategy out there called the 520 EMA crossover strategy. That is, if the 5 EMA, the line, is crossing over the 20 EMA towards the upper direction, it is kind of said that the stock would be bullish from there. Or just the opposite. If the 5 EMA line is breaking the 20 EMA line towards the lower direction, then it is said that the stock or the underlying will be bearish from there. Let's actually go to the chart and see if a golden crossover happened today, right? 5 and 20 is all that we need to look so that we can hide 10, 200 and all. So 5 and 20 is all that we are looking here, right? So if you see here, the white line is the 5 EMA. Morning itself, the white line actually crossed over the 20 EMA towards the lower direction. What does it indicate? The underlying is bearish. And what happened? A bearish move actually came in, right? You could have shorted the index here, Bank Nifty, you could have shorted it here and you could have made good money if you see here. Right? But if you see what happened here, there is a crossover, a bullish crossover happening here, right? The white line, the 5 EMA crossing the 20 EMA towards the upper direction. This is a bullish indication. But what actually happened here? Absolute bullishness did not come here. It was actually a fake breakout. It went up, then came down again. Then if you see here, a small crossover happened towards the lower direction. And then a bullish crossover happening here and then an actual good bullish move. And this is where I would say this again, right? All technical indicators wouldn't work 100% in the absolutely expected manner every single time. All you can look out for is a high probable setup. As I keep on saying, right, let it be about price action trading, let it be about technical indicators or any technical indicator for that matter, all you can look out for are high probable setups. And when you have high probable setups and a good risk reward, it is not necessary that you need to win every single time. You need to only win maybe 60 or 70% of the time. But if you have a good stop loss in place and your risk reward is good, then why wouldn't you make money in the long term, right? I hope you get the point here. So that is that regarding the 520 EMA crossover strategy. Now moving ahead, let's even talk about long-term application of moving averages. So one thing which is very famous here is that the 200 SMA is widely used as a base for buying and selling stocks. That is, you look into any stock. If the stock is staying above its 200 SMA, it is normally said that, okay, it is bullish and you can buy the stock. And if the stock is actually coming down to its 200 SMA, it is taking support there. And if it is moving up from there again, people normally say that it is a perfect, amazing time to buy the stock. But if the stock is actually coming down to its 200 SMA, it's breaking that. And if it is moving down from its 200 SMA, it is said that a stock is entering into a bearish territory. So if you are already holding on to the stock, you can probably sell the stock. Even that is very widely, very popularly being discussed in the industry. Just like that, just like we saw 520 EMA crossover during intraday with a 5-minute candlestick time frame for intraday trading application, for a long-term application, by applying daily candlesticks, you can look into 50-200 SMA crossover strategy and 1348 EMA crossover strategy also. If the smaller moving average is crossing over the larger moving average towards the upper direction, it is a bullish indication. If the lower moving average is breaking the larger moving average towards the lower direction, then it is a bearish indication. So I'm not going into charts and showing each and every case, keeping time in mind, but you can always do that. Take it as an assignment, select multiple stocks, apply these SMAs and EMAs wherever necessary, and find good bullish and bearish signals. Amazing. I hope moving averages are super clear for you. In that case, let's learn about the second technical indicator that we are going to learn today, which is MACD. So the full form of MACD is moving average convergence divergence. So yes, there is a little bit of play of moving averages inside MACD also, but the way you use MACD is very different. So when we saw moving averages, those are overlay indicators, right? Because moving averages were plotted on top of candlesticks. But MACD is an underlay indicator. It is plotted in a completely separate area below the candlesticks. So speaking about MACD, it is mostly used as a leading indicator. Yeah. Moving averages were a lagging indicator. MACD here is a leading indicator, and it is a momentum indicator, and it shows trends also. So since it is a momentum indicator, we can easily say that this indicator can talk about the strength and weakness of a trend, which is amazing, right? So if you look at MACD, it can tell you a lot of things. It is a leading indicator. It can talk about the trend which can happen in the underlying that you're looking at. It can also talk about the strength of the trend which can occur. Great. So if you can decipher all of those things, you can easily take a trade, right? So that's exactly what we can look into by learning more about MACD here. So MACD as a technical indicator, it has three components. One is the MACD line, number two is signal line, and number three is histogram. Now I know if I just read these out like this, you'll not understand anything. So that's again where I'll actually come into the charts here, and I'll actually teach you how to plot MACD onto your chart. So you come here again, clicking on indicators, and you search for MACD. It's as simple as that. You search for MACD and tada! Yes, as you can see here, MACD has been plotted here. And this is exactly where I said this is an underlay. The whole indicator actually came below the price, right? So this is how MACD looks. So we just learned that it consists of three components: a MACD line, a signal line, and histogram. So as you can see here, the line which actually moves very quickly, which is very reactive to the price movement, is the MACD line. So what is the reactive line here? It is clearly the blue line, right? So as you can see, the blue line is more volatile or more reactive to the price movement of the underlying. So the blue line is called the MACD line. The red line here is the signal line. And finally, you can see a histogram here. So the histogram is also very important. We'll talk about that in some time. So this is how MACD looks when you plot it on the chart. It is an underlay indicator, and it has these three components. Now you understand something. But again, you'll have questions as to how to use MACD so that you can practically take a trade. Yeah, that's exactly what we can talk about in the next slide, the intraday application of MACD. So again, the first thing that you can see here is 12-26-9 is the most common setting for MACD. So just like we had time periods for moving averages, we spoke about 5 moving average, 10 moving average, 200 moving average. Just like that, there are certain setting which has to be set for MACD also, and the most common setting which is appreciated by traders is 12-26-9. So let us actually make sure our MACD is set to 12-26-9. So I come here and click on this, and then I have the settings come here. Yeah, I'm clicking on settings. I'm going to input. So the fast length is 12, the slow length is 26, and the signal length is 9. So it is already set to 12, 26, 9. Just like we did with moving average, you can come here and you can change the colors here of the MACD line, of the signal line, and even of the histogram if you're interested. I'm not doing that here. So I'm clicking on OK. Now the most preferred setting is 12, 26, 9, and I've already set MACD to 12, 26, 9 for my setting, for my charts here. Now that is done. Now, how do you apply this on an intraday trading basis, right? That is what is written here. If the MACD line crosses the signal line from below, it is a bullish indication. Just like we spoke about a smaller moving average crossing over a larger moving average, it is a bullish indication, right? Just like that here, if the MACD line crosses the signal line from the below towards the upper direction, it is a bullish indication. And exactly the opposite of that is a bearish indication. Cool. Let's actually go into the chart and see, right? So today morning we know Bank Nifty actually moved down. So the market actually opened somewhere around here and it started moving down. Just at this point, the blue line is the MACD line and the red line is the signal line. You can see that the blue line, which is the MACD line, is crossing over the signal line, the red line towards the lower direction. And just before that, you can also see that the 520 golden crossover is also happening towards the lower direction. So here also you're getting a bearish indication. Here you are getting another bearish indication from MACD. Both put together, you could have gone short on Bank Nifty, and what happened? Bank Nifty actually moved down a lot here, right? And if you look here, again a false signal in MACD also. The MACD line is crossing over the signal line here, as you can see. But again, something very significant happening here with Bank Nifty. No, right? But again, if you see here, moving average crossover is not happening here. So if you're confirming with two indicators, you wouldn't have gone long here. Great, right? Then you're waiting again. Then here, earlier we spoke about a false indication from moving averages. But at the same time, you cannot see any confirmation from MACD. So if you're using two indicators together, you wouldn't have gotten trapped here. I hope you get the point, right? Then let's see what again happened. Then if you see here, moving average crossover is happening here. But here, as you can see, the MACD line is already staying on top of signal line. So not necessarily a signal is coming from there. I hope you get the point. Maybe we can look into another day as well, right? So I'm just looking for a crossover that we can find here. Maybe we are finding a good, powerful crossover here, right? So when I say a powerful crossover, a crossover becomes more powerful when the angle in which the crossover is happening is larger. So if you see here, the angle here is larger, and that is where the histogram also comes into picture. So when the angle of the crossover is larger, the histograms are also bigger. So that's something that you can watch for understanding the power of the trend there, the momentum of the trend there, right? So you see here, the crossover is happening towards the lower direction, which kind of indicates some bearishness in the underlying, and you can see it actually came down a bit here. That's exactly what we can see here in the theory as well, which is if the MACD line is crossing over the signal lines towards the upper direction, that is a bullish indication. If the opposite is happening, it is a bearish direction. Now, when the crossover is happening, you can look into the angle of the crossover. If the angle is big, which shows the divergence is very big, which means that the trend has a lot of strength, and you can confirm that by looking into the histogram also. I hope things are very clear. Moving ahead, we can even talk about long-term application of MACD. So I'll quickly read through it, and again it is an assignment. You can look into it yourself. So the setting that you can use for MACD when it comes to long-term application is 5-35-5. It is more sensitive, and hence it can be used in the weekly charts. Yeah, so you can set candlestick time frame to weekly, and you can apply this setting of MACD, and you can use the same exact analysis that we did before, which is again written here, which is after going to the weekly chart and applying this setting of MACD, then if the MACD line is crossing over the signal line, it is a bullish indication. If the MACD line is crossing the signal line towards the lower direction, it is a bearish indication. As simple as that. Now, if MACD as a technical indicator is also very clear, let's learn about the third technical indicator in today's class, which is CPR, or Central Pivot Range. Now, again, this is another technical indicator which I like a lot, because this is a technical indicator which is derived from a lot of price action based data. You'll understand what I'm talking about when we learn about this further. So first questions first, which is what a CPR. So CPR is central pivot range. It is a leading indicator and it is based on price action. That is what makes CPR really beautiful and really effective, right? It is based on price action and it is a leading indicator. The second point here, as you can see, is CPR is a mathematical fixed indicator. A fixed indicator here means that the value of CPR levels do not change with time. Say a day has started and there are certain CPR levels that you can plot on your chart. Even if you plot a 5-minute candles or 15-minute candles or 30-minute candles, the CPR levels would stay there itself because this is a fixed indicator. So when we go into chart and learn practically how to plot and apply CPR, you'll understand what I'm talking about. Next, we should understand what is the use of CPR, right? So that is what is said here in the third point. It helps the trader identify key price points. And what are key price points? Supports and resistances. Beautiful, right? So supports and resistance are something that we appreciated a lot when we learned price action trading. So CPR is a technical indicator which is based on price action and it tells us support and resistance levels on chart. And it also talks about the associated trend around these price points. Beautiful, right? Now CPR has three parts: pivot points, bottom central pivot and top central pivot. Again, you would understand if you're just reading theory here. That's why we'll quickly go into the chart and actually plot CPR, right? So for that, I'm going into technical indicators here. I'm searching for central. I just have to search for CPR, right? CPR with pivot levels is what it is. So I've clicked on it. A lot of things here. I'm just minimizing it and see what has happened. A lot of lines have come on the chart, right? So if you're okay, I'll just remove MACD so that we can see this better. Okay, you're seeing this better, right? Now, if you actually go here into CPR and go into the settings, you'll understand what these are. See, if you look here, you can see that the blue line is the daily pivot. Then you have a daily BC and a daily TC. What are they? Those are the bottom central pivot and top central pivot. I'll come to that. No worries. Okay. So coming back here, you can see that then there is daily S1. S1 is support 1. Then there is daily R1, resistance 1. Then there is daily S2, which is support 2. R2, which is resistance 2, S3, which is support 3, R3, which is resistance 3, and finally you also have the previous day high and low marked here. So you can, if you are not interested in the previous day high and low, which is a price action based important level, just for the simplicity of things, you can remove it from this. And I'll also remove R4 and S4 so that we are keeping things very simple. I'm clicking on OK. Yeah, I'll just minimize all these things here. So what can we understand from CPR as an indicator? So these blue lines, as you can see here, that whole zone is called the central pivot range or the central pivot zone. Apart from the central pivot range, you also have resistance for the day and supports for the day marked already in the chart. And see the magic of that, right? Today, Bank Nifty opened at around the CPR, it moved up and it took resistance. Where did it take resistance? Exactly at R1 for the day. Right? This is already pre-mentioned, pre-marked on the chart. The first resistance is called R1, this is called R2, this is called R3. Just like that, if you speak about supports, this is called S1, this is S2 and this is S3. So Bank Nifty moved up today, took resistance at R1, came down. Where did it come down to? It came down till its CPR range or central pivot range and it consolidated within the central pivot range. Then the bottom central pivot was broken. Now when that is being broken, a support is being broken, it moved down, 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 down. Where did it move down till? It moved down till its S1. Tried moving up. It took resistance at 20 moving average. Came down. Beautifully taking support at S1. Taking support at S1. Again now moving back up. When it moved back up. So when it is moving back up, the whole central pivot range will act as a resistance. And it indeed acted as a resistance. It came down. Now it is trying to break the central pivot range. And just like in the morning when it was coming down, from the top it is coming down, the central pivot range tried to act as a support. See, it tried to act as a support. It tried to move up again, but then it was eventually broken. So the CPR zone itself will act as a support and resistance. On top of that, you have R1, R2, R3 and S1, S2, S3. Beautiful, right? And even when you talk about the CPR, the zone, the range itself, there you have a central pivot itself, this line, then you have a top central pivot and a bottom central pivot, and based on where they are being attacked, they will act as a support and resistance also. Now as you can see here, the market is open, Bank Nifty is moving, it is beautifully breaking out, or currently taking resistance at the central pivot range. Maybe it is even breaking out. Let us watch, right? So that is that. So you can look into any day and you can get the whole point here, right? So when we began, we spoke about CPR and all the levels being a fixed indicator, which means that all these levels are calculated using price data from the previous day. So these are actually plotted on the chart at 9:15 a.m. itself, and they do not move with time. Almost all other technical indicators, you can see they move as time passes or the price of the security is moving. But CPR levels, let it be R1, R2, S1, S2, anything, they do not move at all based on time, based on the movement of the price of the underlying, or even if you change the underlying, say, to 30 minutes, candlestick to 30 minutes, even then you can see the CPR levels for the day do not change at all. So I'm just going back into 5 minutes just for the sake of it. I hope you understand this. Now you understand what CPR is. So before moving ahead into intraday application, let us understand a bit more about how does CPR work. Right. So there are some important points that you should keep in mind. Number one is it gives important price levels, supports and resistances. Beautiful. I think that, according to me, is the largest use case of CPR. You have R1, R2, R3, S1, S2, S3, and the CPR with the top and bottom central pivots also. So all of these lines on your chart will act as supports and resistances. Beautiful, right? So me as a price action trader would love to use it, is what I would say. Number two is consolidation inside CPR and breakouts away from it. We saw that happening today, right? So we saw in the morning, Bank Nifty kind of consolidating within the CPR zone and then finally breakdown happening from there. So that's also very important, something that you can observe many times. Third point here is CPR pulls the price towards it. It has a magnetic effect. Then we see that here. See, price was away from CPR and CPR actually pulled the price towards CPR. Then yeah, a breakdown happened, it came down. But what happened in the second half? CPR again pulled the price towards it. Price again came back to the CPR, right? So you can see that in multiple days, mean reversion happens to CPR on that particular day. So even yesterday, if you see, price moved away from the CPR, but eventually towards the end, it actually came down to its CPR. So even if this day, if you see, there was a gap down opening here and price moved back to its CPR, right? Even if you see here, price tried to move up a lot, but then it came down to CPR. So that happens in many days, is what I would say. Not every day, but it's a high probability thing that price would actually mean revert to the CPR levels in a day. Cool. The next point you can see here is wide range CPR means choppy and sideways market, and narrow range CPR means a trending market is possible. So when a day opens, right? When a day opens itself, you can see that if the CPR has a wide range or if the CPR is very narrow. So you can say that today's CPR is kind of wide, you can say, right? These three lines, you can see them separately and there is a wide range here. So such a day, you can kind of say that market will be choppy and sideways. What did we see today? It is a choppy and a sideways market, right? Went up, came down, now it's going up again. But overall day, if you see, Bank Nifty just consolidated between 42,900 and 43,200, just 300 points. So it is a pure sideways choppy market. Now let us look for, so even if you see here, this is a even wider CPR here. Let us look for a narrow CPR. So here if you see, this day, it looks like it is a narrow CPR, correct? It's very narrow. Three lines are very close to each other. And narrow CPR means a trending market is possible. What happened on that day? Market opened, went up, stayed there, and towards the end, the trend continued. It just moved up and up and up. This again, it's a high probability thing that if it is a narrow range CPR, a trending market is possible. And that's exactly what we can see here. And if it's a very wide range CPR, then it would be sideways and choppy market, as you can even see today. Cool. So that is how CPR works, or how you can actually put CPR to work. So if all this is clear, then I don't even think that we need to get into intraday application, because you would have probably understood how to use it, right? Number one is narrow CPR screener can help in identify trending stocks for next day. The link is here. Yeah, a charting link is here. I'll put the same link in the description and the pinned comment also. What you can do is any day at around 9:20 a.m. you can go into that link and that charting screener will tell you which all stocks have a narrow CPR in that day. Right? So you'll get a list of stocks which will have a narrow CPR. Then what does it mean? There is a high probability chance that that stock could trend that day. If that is the case, you can take a really good trade there, right? So that is the use of a narrow CPR screener. Again, link is given down in the description. You can definitely check it out. Number 2 is use along with price action and other indicators to confirm end rate. So what I would say is I plot my CPR. I have the central pivot range with the top and the bottom central pivot, R1, R2, R3, S1, S2, S3. I look into them mostly in order to understand supports and resistances. Cool. Very beneficial. And finally, chances of price moving back to CPR ranges, you can also keep that in mind and take trades based on that. Now, that is that regarding CPR also. So we are kind of coming to the conclusion of the video. In today's class, as we said, we learned about 3 indicators: moving averages, MACD, CPR. So I even told you how to practically use them. What all are the things to be looked at when you want to use these for taking a trade. So what I would urge you to do is try these out. Okay, for a few days, try this out without putting in any money at all. You're seeing a moving average crossover happening. You kind of take a paper trade, at least in your mind, right? Or you're looking at a CPR level acting as a resistance, acting as a support. So use it for paper trading at least for a few days. Then if you're finding anything which you feel is kind of beneficial, then what you can do is take trades with your analysis with as little capital as possible, only so that you get used to all this, right? So see, in the last 1-2 months, you have learned a lot of things about price action, right? I hope you have understood price action, you've mastered price action at least to some extent, and you're taking trades with that. Now, if you're seeing some technical indicators are working, club some technical indicators along with your already mastered price action technique, put all together, you can become a better trader. That is what I'm saying. So before we say bye today, I really want to read this out, right? Things to keep in mind. Number 1, there are no perfect indicators. Do not believe. People might say that they have some perfect indicator. You can buy it from them and then you'll get buy and sell signals and all of them would work and you'll make money. There is no perfect indicator. Number 2, do not overuse and fill your charts with indicators. Please do not do that. I would still urge you to become a price action based trader who uses some technical indicators. That's the best place to be at, is what I believe. So do not overuse and do not fill your charts with indicators, right? Number 3 is different indicators might work well for different stocks and indices and might not work for others. I've personally seen this. Say maybe a VWAP with a particular setting is working for HDFC Bank, but VWAP with that setting is not working for Reliance. Maybe you have to change the settings there, or even then VWAP is not working at all for Reliance. Just an example, okay? Maybe for Reliance, you have to use another technical indicator. So such things also happen in the market. Point number 4 is indicators will not give you an all truth of the market. Look at classic price action also. That is the final pro tip for you before we bid buy for today. So yeah, that is it from my side for today. So yeah, it's really good to see that the community is evolving. You're all getting better as traders also. We have learned about price action. Now we are mastering technical indicators also, right? So in the next class, we'll be talking about some more technical indicators which I personally feel are super helpful and super effective. So as always, if you like the video, make sure that you smash the like button. You jump into the comment section, ask me any doubts that you have on your mind. Also, invite people to join our community, share that video, share the channel with people, and subscribe to the channel if you haven't yet, right? So yeah, that is it from my side for today. As always, let's learn, let's trade, let's invest, and let's grow together. See you in the next class. Bye-bye.